In today's video, we're going to talk about the difference between trade ideas and actual trades. When you finish watching today's video, head over to the link in the description and join my free trading course. Hello everyone and welcome back to the channel. Today I wanted to talk over something that I found quite important after posting my analysis video on Monday. Now on Monday, if you haven't seen the video, I posted a GBPUSD short idea that I was looking for a fill of the gap and then for the market to break down past this low and sell off from there. So the idea given was something like this. Now what I then had were people in my DMs, people on Instagram and people on YouTube saying stop loss hit when the market made a push to the upside. Now what confused me about this is the setup never formed. And I think it's important for people to actually understand that there is a difference, and a very big difference, between trade ideas and actual executed trades. As traders, we cannot see the future. We can only react to what the market shows us and what the market gives us to work with. So when an idea is formed, it is simply an idea. We build some criteria and we say, okay, if this level breaks, if this structure breaks, we will then look to enter a trade. But until the structure breaks, there is no way that we can know where the market's going to go. So what we should be doing as traders, and what I always do, is actually build a picture of the market, and then I wait for my confirmations, and that is when I will then look for my executions. Never enter without the confirmation on my side. So even though people were saying stop loss hit for this position that never came anywhere near to stop loss because it was never entered, it actually ended up hitting the target after providing some very nice entry criteria. So in this video, I just want to break down the difference between trades and trade ideas, why you should be forming many more trade ideas than actual executed trades, and how you can increase your win rate by actually planning ahead and waiting for the market to agree with you before jumping into any positions. So first of all, let's break down this trade idea. I'll show you what it is that I actually came up with and what I then waited for to make the execution. So in Monday's video, I showed a setup here on GU. I think the price action at the time was around this point. And basically what we had seen from there was a fill of this gap. And as we know, generally gaps are going to be filled in the market after they form. And when the gap was filled, I was then looking for potential to sell down. Now, why was I looking to sell down? We're in a heavy downtrend and there was some open imbalance into this point. As we can see here, open imbalance, demand zone here that I expected to be filled because this push hadn't fulfilled this area. So I was interested in seeing if we could sell off from here down towards this point. Now in the video and on my Instagram post, I made it very clear that we should not be executing any trades until we break through this low here. And that's because this is the next 10-minute structure point in this current uptrend. So the idea given was to actually wait for a breakdown like this and then to sell on pullbacks. And the idea for that, and the reason for that, is because obviously if we wait for that breakdown, that confirms to us that the trend is on our side and that we're trading in line with the favor of the market. We never want to go ahead and execute a position from this point because we're still in an uptrend. So it'd be silly to actually sell from here. People ignored that and people actually went for a position from this point without waiting for the trend to agree. Now it's totally fine and I'm not throwing shade. It is a learning curve, but I just want this video to help you avoid selling into these areas and actually wait for that larger confirmation before executing any positions. It will dramatically improve your win rate, and overall it's going to help you to win a lot more trades and lose a lot less trades as well. So as we will see, there was no confirmation given and the trade actually formulated the next day. So I think it was around this point when the market drove through this next high, which actually people started saying stop loss hit. Now the obvious invalidation point for this trade would be this high. The reason being, if we break above this high, we've broken out of the range, we are likely to then start pushing into this upside imbalance. But right now, all we can see is that we filled the gap, we're building supply, and if we do get confirmation to sell, well then we can go for a short. Now here we obviously saw two equal lows form up, and because we have continued further in the trend, we can start focusing on the nearer term structure points rather than this structure point here, because all we need to see is for the trend to shift, okay? So moving into the next day, then we had Asia session consolidated as we usually do, and then after that, we had this large sell-off. And this large sell-off actually broke through the significant structure area. So if we just quickly break down the trend, we have the low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, equal lows there, but then we had another push up, we formed this higher low, and then we had a higher high. So this big impulsive sell-off that we had actually broke through the significant structure point there. And what that did was actually prove to us that the market was now ready to go to the short side. And from here, this is where the executions could have been made. Now, if we go to the 5-minute time frame, you'll see that we had a very clear supply zone sitting just here. This supply zone was reacted within the London session at around 11 a.m. UK time, and from there the market actually dramatically sold off. Now this would be the place for a safe entry, and the reason for that is because we actually have confirmation now. So while my first trade idea didn't form, we can still roll with that initial idea, and that's why we analyze the market in advance, and then we can actually profit from whatever the market does, so long as it fits within our criteria. So as you see, the initial idea formed here to break this level and sell, but the level didn't break, so we didn't sell. The trade did not invalidate because we didn't break out of the range. So then when we did break the next structure points higher in the trend, with this large bearish impulse showing a lot of bearish momentum, that is when we can then begin executing trades because we have the trend in our favor. And as you will see, what we actually get from this is the trend agreeing with us. And we had a few trade ideas, this initial trade idea. I was also looking at a trade idea when we were in this area to see if we would break down. We didn't break down there either. And then this third trade idea where we did break down is where the real confirmation came in. And as you can see, that is 3 trade ideas for 1 trade execution. And the reason it's important to differentiate between trades and trade ideas is because we're not always going to be taking the trades that we formulated, right? We may build an idea like this, for example, but the trade is never going to be executed because the idea never fulfills, the criteria is never met. Because we can't see the future and because we don't know what the market's going to do next, our job is to simply build an idea of what the market may do and then react when it does that. We can see here the market may sell off if we break this level. We never broke the level. We can see once again here the market may sell off if we break these levels. The market never broke these levels. And then the third idea, we could sell off if we broke this level, because that obviously shows us trade not invalidated, momentum coming in, trend shifted, then we can sell. And as you can see in this one, we did win. So while people were saying stop loss hit back here, it actually ended up being a target hit trade. And that could have been a very nice trade for you had you actually waited and been patient and stuck with that larger criteria picture and executed based on confirmations rather than on guessing and selling into the market without the trend in your favor. Now this goes for all the trades you take, okay? You are going to formulate many more trade ideas than trade executions. And if you are not already doing that, then you definitely should be, and you need to change something about the way you trade. You shouldn't be diving into the market and seeing any random opportunity and going for it. Instead, you should be building a picture of what the market is doing, building criteria lists, so if this, then that, and then allowing the market to play out with invalidation levels in mind, such as if it breaks out of a range, the trade is invalid, and obviously the entry criteria in mind as well, such as if we shift the trend, the trade is now valid. When you learn to step back, be patient, and allow the market to show you what to do, you're going to make a lot more money and you're going to have a lot less stress, run into a lot less losses than when you're guessing at what the market's going to do next and entering trades here, there, and everywhere, hoping that one works out. So that's pretty much it for this video. I just wanted to talk through that because I did have a few comments. Well, I'm not trying to throw shade here. Hopefully it doesn't sound like I am. It's a talking point that people can definitely learn from. There's no need to be screaming stop loss hit when the trade was never even ready in the first place. Patience is going to allow you to win many more trades just like this one, instead of being on the wrong side of the market and taking a loss on a trade that was never ready in the first place. So I hope you found some value in this video, just a quick little talking point there. And if you have, please do drop a like and subscribe. But more importantly, I just hope you've enjoyed the video and hope you've taken some value from it. So thank you for watching, thank you for listening, and I'll see you in the next one.